Buddy, it's Brian Shannon from alphatrends.net. Today's Friday. It's the 28th of July, 2817, and the market finished here kind of mixed, I guess, for the week. Oil surged pretty good, but the S&P 500 just pretty much unchanged. Nasdaq, Russell, semiconductors, biotechs all lost a little bit of ground. So let's take a look at the action on the charts and see where we are. You know, it never fails to amaze me that every single time we get a little bit of spirited selling like we saw Thursday afternoon, that people are so quick to call the end of what's been such a fantastic bull market. We remain in a strong uptrend here. One day of selling makes not a bear market, and you have to look at it and say, where have we come from? We just experienced a real nice rally that began on the gap higher from the 12th, and then I had pointed out for the last couple weeks that the volume weighted average price from that level, from that 12th, was hit here, and then we drew a volume weighted average price off of this line, which was holding as well for a bit here, but that rising 5-day moving average told us give the benefit of the doubt to the buyers. Well, on Thursday we broke down. We are still below that 5-day moving average, which has a slight downward slope to it, and that simply tells us to become more cautious. It doesn't mean call the top. I can't tell you how many times I've heard people say that that's the top, that's it, it's different this time. What we do instead is a more prudent approach. We listen to the message of the market, and the market is saying we're kind of stuck between this 5-day moving average and what we saw was the volume weighted average price off of this peak that we broke. So we broke some support. That support is acting as resistance. We have a 5-day moving average in there as well as the volume weighted average price from that gap higher earlier in the week. So it tells us that as long as we remain below this level, 247 and a quarter, really, that we want to just be a little bit more cautious. It doesn't mean bearish, it means cautious. If we break down below 246 and stick below there for more than a half hour or so, then I think that this market is likely to experience a little bit deeper of a pullback. But I don't think that again, I don't think it's prudent to call the end of a bull market. Perhaps we get a movement down towards 244.50ish or so. So heading into next week, where we stand right now is just a little bit cautious. Buyers regain control back above 247.25. The primary trend is higher. We're seeing, a lot of earnings are coming out, and they're not destroying the market. We saw that today. Amazon was down pretty strong, and that didn't cause the Nasdaq to fall apart. In fact, if you look at where Nasdaq or Amazon came down to, we can take a look here, and let me just go to a cleaner chart where we can see that the volume weighted average price from the last large sell-off kind of held in there. Anyways, the Nasdaq for its part this week, let's look at a 30-minute time frame. You can see the volume weighted average price from this low down here, or the volume weighted average price from that gap. The volume weighted average price from the gap on the 12th held as it did in the S&P 500, and same story. We're below a 5-day moving average. So in the Nasdaq, if the buyers can regain control, it will have to get back above and hold above 144.50. But if we break down below 143ish, then a quick drop to 141 seems highly likely to me, and then we'll have to reassess from there where it has the next potential level to find support. But right now, again, there's nothing here indicating the market has made a peak or that we're entering a bear market. The Russell 2000, last week I said, is this the time that we're going to see a breakout hold? So far it's doubting. We have reason for doubt once again. It just continues to grind higher and then pull back. The good news is that the volume weighted average price from this gap lower is holding on a closing basis. The bad news is we're below declining 5-day moving average, and we broke this little intermediate term pattern. That's not what I meant to do. This little intermediate term pattern of higher highs and higher lows. So that tells us be cautious. Let the market settle in and decide what it wants wants to do before we take any fresh positions. The semiconductors, this market, the gap from over here, this gap, we're stuck below that right now. We're also stuck below a declining 5-day moving average. So perhaps we drift down towards 85.50-ish as an initial area. But if we get back up above 87 and a quarter, 87.50, then the buyers regain control. Intermediate term, I wouldn't be surprised to see it drift down towards 85.50, and then as I do every single day for subscribers, I'll update it from there. That's not only the volume weighted average price from that low, but it's also the location of the 20 and the 50-day moving average, which a lot of people are trained to buy at. So it's likely that that area would hold as support, but we'd have to see what kind of evidence the market gave us, whether or not there actually was support before we decide to put our money at risk in there. Biotechs pulled back a little bit, but they broke this first level of support. So from an intermediate term perspective, I got out of it, and it looks like it's still consolidating in a healthy way. It's still in a longer term uptrend. The volume weighted average price from this little peak where we saw the buyers regain control was tested, and it's holding so far. But 324ish is where the buyers are going to have to reestablish their dominance back above there. I think it's most likely that the buyers will in fact regain control once again. It's just a pullback, and you have to be aware of what's your personal time frame. I like to be on the sidelines when it moves aggressively lower like that, getting stopped out and avoiding this deeper pullback. Maybe that means I miss another gap higher. I did on this move. I had gotten out over here and was looking to get it back involved, but missed this gap higher and instead paid up the next day at this point. So know your time frame, know what works best for you. I'm going to keep today's video very short and end it there. Hope you had a good week, and I'll talk to you next week. Thank you.